Welcome back to the Daily Hunt. I'm Henry, and today we're going to be covering the markets. As always, the main thing that we have to focus on is crypto and the rejection. But we also have a rejection at 6.7, 6.8 with the S&P 500. And are we in a consolidation distribution phase, or are we in an accumulation phase? Okay, are we re-accumulating here to go higher, or are we distributing? At the moment, the markets are looking flat, and we need to make that decision. We need to figure out what's happening, and that's exactly what I'm doing here with my daily show, giving you guys daily insights and analysis based on my opinions, my views, my analysis, and how I'm trading. If you guys are wondering why you should listen to me, I'm already up 90% this year so far in my stock trading portfolio, and I'm up 280% this year with my crypto portfolio. The stock trading portfolio, you will be able to see the proof in that in the US Investing Championship, where I'm sharing my performance every month. There is a 1 month lag, so you're not going to get the exact numbers, but right now, as we're talking on camera, it's 90% plus. Okay, 90, 91. Okay, so let's get right into it. I want to cover mainly the S&P 500, NASDAQ, and the VIX. We're going to be discussing that. The dollar yesterday was a big theme that I wanted to touch today and discuss. But the S&P 500 is the key here. Okay, so the S&P 500 pushed up higher 2 days ago. On Monday, I said that if we move above 6.7K, we are looking quite bullish, and that it would be, excuse me, it would be an opportunity for us to rebuy because the upside potential is still there. Now, we are still facing a bit of rejection here on the lower band of the channel. And without going above this and back into here, we don't really have any bullish momentum confirming. We are still quite flat. And if we capture this period, so if we look at this period here between early September to now, we are quite flat. We are moving sideways. Is this a distribution? This is the fear. And a lot of discussions about this being a Wyckoff distribution might be true. It's looking very, very similar to this distribution here in November, December of last year. Okay, similar period, similar times. And what is the driving force here for this to move up higher? For me, it's CPI data. We'll be watching that on Friday, and hopefully that moves the market higher. If this comes in line or lower, it's all green. It's a green light for the central bank to lower interest rates. If, however, we go higher, maybe there's some selling off happening. Then we have next week, Wednesday 29th, the decision itself. Everything is priced for an interest rate drop, okay? Everything is priced with that in mind. And we've also had some problems yesterday with Netflix. Okay, so Netflix misses earnings and drops about 6%. That's huge for Netflix. So there are signs of issues brewing in the market. Netflix selling off. We've had some other ones sell off as well. For example, the quantum plays that were doing really, really well for us, and I exited on Thursday last week, are losing big chunks, okay? About 6-7% daily being lost here. As you can see, significant drop here from the high of where we sold it, around 38, 39. And then, now we're going into maybe further shorting here for this one. So we're losing momentum. Gold as well is dropping. We have PPTA, which was part of my portfolio, dropping here. This is metals, okay? But gold also losing momentum here. And gold was a trade that I shared with you guys 2 days ago. Perfect timing 2 days ago. Friday was the perfect time to start looking for the short, and here we are. Okay, yes, we moved up higher here, but I'm a swing trader. I'm willing to hold it through, and exactly what I was saying in the previous video, which was 4K has been hit. Now we have 3.9K to be hit. So 2 days in a row, I've told you short um, gold, and I shared it on Friday as well. And I told you guys that I think Friday is a perfect time to short gold. Okay, Monday as well. So here we are. Go and watch the previous videos. You'll be able to see all of that. Now, with this stuff that's brewing in the markets, for me, it's all about what's happening with the VIX. Okay, we're going to go to the VIX really quickly. These are my previous trades, so we're going to just take them off. Where are they? Okay, the VIX. Okay, so if we look at the VIX, I said to you, it's dropping here and the volatility is going down, but maybe we go back up. Now, this is a decent level for the VIX to now decide to move up higher again and create kind of like a spike to keep on creating the volatility that we're seeing in the markets of the moves up and down. You see, that's volatility. That's similar to August, where I actually lost a big chunk of my portfolio in August. I was around 60% in August, and I should have been now maybe 100 and 120% profit in my portfolio. But August was a very, very volatile period, and I was caught in a few bad trades. So here you have it again, similar situation with the S&P creating volatility here, and potentially some sort of distribution and reaccumulation happening. We need to find out if it doesn't break up around above 6.8, 6.75 with CPI data this week and the Fed interest rate decision. We then will be on the short side. Okay, I've mentioned it in previous videos. I think we can go 5 to 6% on here. Okay, so watch out for that zone of 6.4. Very, very nice zone there to be hit. We have 6.4. We have the monthly, which looks overextended as well. So I wouldn't be surprised if this happened here. Now, of course, the monthly can continue going higher as it has done previously. The S&P usually gets bought up quite quickly, but you have the bearish divergences and all these other factors, okay? So be very, very careful here with managing your positions. Personally, I've moved more into cash and I've scaled out of some of my positions. And with crypto, I've stayed cash. I've only traded 2 ideas recently. Both were winners. And then I've stayed cash for the swing trades. In terms of the NASDAQ, I think the NASDAQ is probably important as well to cover. A lot of this stuff I've covered in the previous videos, so I don't want to just cover the same stuff. I know a lot of you guys are regular watchers, and I don't want to cover the same stuff every day. But if we look at the NASDAQ, I set out 2 levels. The NASDAQ looks a little bit higher, or is a little bit higher than the S&P, right around that all-time high level. And if we want to see real momentum in the markets, this has to break. This has to break. And I think that will drag the rest of the market higher. This will be stocks like NVIDIA, which will probably drag AMD and all these other opportunities. But this week, you also have Tesla earnings. We've had Netflix. We have, I think, Intel as well. So we have to monitor earnings as well. It's early start of earnings season, and we need to monitor the situation. Netflix is a bad sign for the markets. The Russell sold off a bit yesterday. We had still in this kind of distribution phase here, and even though we hit all-time high last week, Wednesday. So I don't really see anything different here. Still, to me, looks like we need some downside momentum, maybe 5%, as I said, in the S&P 500. Okay, 5% S&P 500 is a nice dip, and I think that's where we're seeing more buying. However, it's a bad sign that people are queuing up for gold. I will say that. It's a bad sign. It means that something is brewing, okay? We have to be cautious. November was a key moment that I mentioned for a number of weeks now as part of my strategy, where the market will decide where it's going to go. And so far, we're waiting for that November period, maybe late October, with the interest rate decision to decide where the market goes. If the market finds something that they're unhappy about, if the market thinks that tariffs will be imposed on China with 150%, like Trump has discussed, then we are looking at a situation where we will go short. We will get dumped on. So be careful and be prepared. If that gets resolved as well as interest rates get dropped, we are looking bullish. There's two things that we should be looking at. CPI data will be a precursor as to what's to happen with the interest rates. I think I'll leave it with that, with the indices and the stock market. My portfolio is doing okay, some minus, some plus. As you can see here, CRM moving up. We have Lululemon, which we traded from the bottom, looking pretty decent here for this swing. For me, I think maybe we go all the way up here to 200. I can make a nice little 20%. Depends on what the demand is, but it's looking pretty good for a move up higher, even 25. In terms of analyst ratings for this one, they rate around the current price, but stocks can move a lot more than what analysts rate it at. And it's a nice bounce. The structure is perfect. Everything looks pretty good, in my opinion, for a move higher here with Lululemon. So I end up buying. The CS is doing pretty well, kind of consolidating around this zone. Not too bad. And we can kind of see potential for a leg up again for software. CRM was also doing pretty well since I bought it. We end up buying around this level here for 248. Doing okay considering the market conditions. And then we have some of the semiconductors and Tesla. Tesla, obviously, there's the risk of the earnings. Is it this week? I think it's this week. It's this week, yeah, today. So there's that risk of earnings with Tesla today, but in general, it's looking pretty good. I think if we can get a nice surprise, we get a move up higher. If not, I sell for around break even. I am in profit with Tesla, so I'm not too fast here if it moves down a little bit. And yeah, as you can see, I've traded it multiple times this year, so we've managed to accumulate a decent amount of profit with Tesla. Semiconductors with Nvidia and Intel, etc., consolidating here, looking quite short. For me, it's looking risky, and I might look to get out of Nvidia. AMD, maybe. I'm just looking at it here. Maybe on the verge here of seeing a bit of a drop, coming back down to 214. Bear in mind, again, I've traded this multiple times this year, even from the lows here. So we've made a decent profit on AMD, and if some of our profits get eaten away, it's part of the game. SMCI, very similar. One of my best performing stocks, actually. I've made over 10-15% of my portfolio profits this year in SMCI. So very, very good. This has been a big play. This one. We've also traded from this bottom area here, and we're still kind of. I ended up re-entering around this level. I ended up selling on Friday. I think it was Thursday, and then we re-entered on the Monday around the zone that we sold, with the idea of a continuation happening here. It's not happening, and if it isn't happening, I am out. If there's no momentum, if there's no bullish signs here, I will be getting out, and probably getting out for a small loss or a small win. This is kind of my portfolio. This is my portfolio currently, and yeah, I mean, Archer hasn't moved up higher since I re-entered, but we had this before as well on this move here from the 30th of September. So it's moved pretty well, and we end up selling some around the top, and then now we can kind of call this a day if it breaks around this level of 11.10, and then it'll move down. So I don't really mind losing some here with these ones, as well as AMSC looks very weak. We ended up trading from this zone here, made some decent profits, re-entered a few days ago, and it's kind of been fading the last few days. So I won't be looking to hold much more than 57.8. We get out, we kind of maintain some of our profits and take a small loss on this rebuy trade. All right, so that's stocks all covered. There's no other opportunities that I see in the markets in terms of other indices. They're all red. Everything's kind of dropping, mainly due to the dollar. Okay, I mentioned 2 days in a row, dollar is the key. The dollar is the reason why we have to be cautious with gold. The gold will go short, the dollar will go up, and we have to monitor the effects of the dollar on crypto and the stock market. As you can see here, it broke that 98 level that I mentioned a few days ago, and now we're kind of showing a bit of strength for this to move up higher. If we're going to get this move above 99, maybe to 100, 101 all the way up here, we then have that 5 to 6% correction that I mentioned. So are we getting to that point where we're seeing the early signs of that correction, or are we going to get the dollar weakening again? For me, it looks like a correction is imminent, or some sort of drop, and we have to monitor this situation with the dollar. For me, it's the 98 level again. If it breaks down below, we are feeling comfortable, and we can say that the rest of the market, gold is bouncing, S&P is bouncing, crypto might increase as well. So that's where I am at. 98 has been a nice level where if we broke above, we would have seen a drop in the markets, which we have seen. And then now if we break under it, we will see significant momentum coming into stocks, cryptos, and the metals. Okay. Right. The next part is all about crypto. I'm going to be covering Bitcoin, Ethereum, and maybe Bitcoin dominance, USDT dominance, but we kind of can see the USDT dominance with the Dixie here. Bitcoin. What happened yesterday? I think it's just a huge fake out. There's a bit of euphoria here. I did mention 2-3 days in a row since last week as well that this is my retest zone. I've mentioned it over and over again. I've told you guys, rejection zone. Go and watch the previous videos. This is the key. 113.5, 114 key area of resistance. We went there, and then we didn't break up. We sold off immediately around that level, and we are now moving back down. We now need to hold the midpoint of the channel again. Okay? The midpoint of this channel is key. If we go under, we are going down to 98, which is the monthly levels that we've been discussing. It's the weekly levels that we've been discussing, and it's a level where I think we can kind of see a bit of accumulation again. But if this goes, then it's a frightening sight. We go all the way down to 75 again. We go back to where we were in March, April of this year. Okay? It means that the year will end on a red. The year will end bearish. It's a bad sign for the markets. And the key has always been interest rates dropping and the economy of the US being good and strong, interest rates dropping, and the economy of the US being poor and failing because of the job market and so on. This is the coin flip, and investors are making decisions. Major banks are making decisions now by buying gold. A lot of investors are getting out of the market from what I'm seeing. A lot of big players are getting out of the market, and we have to be cautious. But this level on Bitcoin is the key. If we don't hold this, we are going down. We are in a bear market, in my opinion. We go back to this level. We have not been able to show strength, and the structures are all destroyed. Okay, so be very, very cautious here on how you are positioning yourself. I am just choosing to keep on going short. We are still taking short positions on the shorter time frames as a team, and I'm looking at swing trades on the long side. But if that doesn't come, then we will be going short on the short side. Okay, we'll be going short on Bitcoin if it fails on the swing as well. That's it. I think I've covered in other videos some of the key points. So I don't want to dwell too much on that. But the weekly consolidation here it's pretty much at the high of this year, early this year. So it hasn't really done much since the beginning of the year. So this is January. It was around 107. Now it's around 108. Hasn't done much the whole year. Very negative sign. The weekly looks weak. We are looking very, very weak here on the weekly and the monthly. Be cautious. Maximum caution while buying crypto at these levels. You might be getting better buys lower. Be prepared. It can go lower than you expect sometimes. It depends on what happens in the markets, right? This is what I'm doing. I'm basically 100% cash with crypto. I'm not holding any crypto at the moment. And I've been buying these trends since 17, 18K from the bottoms here. And with Ethereum this year, I've been trading it aggressively since 1.5, 1.6. So, yeah, be cautious. And this is another thing with Ethereum here. If it doesn't hold 3.4, 3.5K, we are going short again. So we have to be cautious. It has to hold at least 3K. 3K is the key for alts and for that potential alt season. As you see in here, the market went up a little bit, then it came back down today. It's a red day today as well, so far in pre-market. Now with Ethereum, we'll cover the daily chart on Ethereum. For me, it's key zone 3.7, 3.6 has to hold this lower band of the channel. If it holds here and we bounce up, we then can build some momentum and potentially start November strong and move up into a run for November, December. Okay, that's it. It's very, very simple. I've given you guys my strategy in the previous videos. I've given you my strategy in my or what I'm doing with crypto in my shorts, in the reels that we've been posting on social media, so Instagram and TikTok. Make sure to go and follow there as well. Right, so that's crypto. There's nothing new. Support needs to be found here. If not found, we go down to 3.3, maybe even 3K, and we need to hold 3K or 2.9K, okay? One of the things that I should probably cover here is this chart, and I think it's important that we cover this properly. We have to cover the chart. Right. Let's look at it. We'll cover Bitcoin, and then we'll cover some random alts so you guys understand the situation and why I think that we can revert to certain zones. Bitcoin breaks 106.2. We are going all the way down to 98 or 92. Okay, very, very simple. Ethereum breaks this zone here. This zone here. We have some support around 3.5. We break that. We go all the way to 2.7 or 3 to 2.7. Okay, that is very, very bearish for the market, considering that we've managed to kind of build some momentum here, and it's died out. It's died out basically. Other alts, Cardano, Link, I will cover some of them quickly so you can kind of see. We are looking bearish. We had that rejection and break below here, and we could go on a retest of this zone of 40 cents on Cardano. Link, and I'll cover just a few of them so you guys can see. Link, break 16, we go all the way down to 13 or 9, okay? Could go back to filling up this shadow here on the candles, okay? On that sell-off candle there on the 10th. XRP, we are at a point where it looks weak again. We go down here or here if we don't break. And there's a trend line that we're probably seeing here now in most of these, we have to break this zone soon. Otherwise, this keeps hitting as a rejection. It's clearly a position where traders are not buying but selling, and then boom, comes back down. Unexpectedly, it will come back down as well. So be very, very cautious of these zones. I just showed you guys with Cardano, Link, and XRP. Okay. Now, let's go to gold. We've traded this short. I want to cover it here. I've ended up trading it from 4.325. And it's looking good. It's looking good for the zones that I mentioned. We have, we've hit 4K, which I mentioned yesterday and the day before as key zones. We have 3.9, and then we can go as low as 3.8. Okay. Now, of course, this will move in ebbs and flows. It's not going to be a straight sell-off, but remember, euphoric buying at these high levels, people queuing up to buy bullion, this will go lower than you expect for that reason, in my opinion. I expect 3.8. Let's see. It can go even lower. I am very, very worried about any gold investors here because of the euphoric buying. Yes, central banks will probably be buying it again, but retail traders buying it around these highs last week, you are losing out. You are losing out big, and you could easily suffer here, because I think if everything sells off, where do people go? People think that everybody goes into gold. I don't think that happens. Gold spikes like this happened in 2008, but I don't think it happens this time, because this market has moved before the event, before the big event. So it's going to happen the opposite way. We're going to see something unique here. That's my opinion. Maybe it doesn't work out that way. We'll find out. So far, this short trade is working out pretty good for me. In terms of other metals, there are a bit of strength shown here with platinum and silver. And then we have industrial metals doing pretty well. Oil moving up higher. I did mention this as a nice bounce zone. As you can see here, bouncing quite nicely. I don't tend to trade oil, and it's kind of following that route that I drew lazily 2 days ago, and I've kind of left there for you guys to see whether we kind of hit those kind of like levels and then get the rejections around these zones. But that's what I'm seeing. Natural gas also doing really well. Seasonality kicking in here, and we have some potential investments that we can trade, like VST and so on. But natural gas seasonality kicking in, doing really well. Huge opportunity that I've mentioned actually for a couple months now, actually, on these major dips, saying that we could probably, I think it was around here, early September, mid-September, where what I was discussing, this is a key opportunity for us as traders, if you want to take it, or a key theme. Natural gas and US oil. I haven't traded either, but I did share them with you guys. I focus mainly on gold, and I'll focus on some stocks which I think would have done well in the last few days during earnings. Okay, I think that's it for today. If you enjoyed the video, go and subscribe to the channel. There'll be daily analysis provided on this channel, as well as a weekly show which I'm working on, which is going to be a little bit different, more talking about current events, talking about how they all link up with the markets, fundamentals, and so on. We might get another person there to host it with me. We're going to be creating a podcast. So a lot of things happening with my channel, but we've started with this daily show to be able to inform you guys on a daily basis of the state of the market and where everything is. Now, if you find this information valuable, you can also join us on in our Discord group. The Discord group has a small monthly payment. You can try it out, see if you like it. There's no commitment. You can cancel after the first month. Try it out. It's daily market condition analysis that I provide there, similar to this, but maybe additional information. There'll be my watch list I'm watching every day for that small fee, as well as other top ideas that I share with you guys as potential trades every day in the Discord group. So go and join that. If you want to join, and if you are part of our social medias, you can also follow me on X, Instagram, and TikTok. Short form content will be posted on X and Instagram and TikTok, and sometimes I share my thoughts on X. I try very hard to kind of stay on top of social media, but I find it difficult because I'm busy trading and investing. But I think this show is the basis of everything, and we'll build on top of that. Take care. Bye-bye.